believe Microstrategy just raised $3 billion in debt and they pay 0% in interest. You might be thinking to yourself, that's stupid. Who would give Microstrategy money with 0% interest? Well, $3 billion worth of people did. And in this video, you're going to learn why people have so much faith in Microstrategy. We're going to go through the worst case scenario and why that worst case scenario might not be coming as soon as some people think. You're going to learn a whole lot about how the financial system works. Buckle up, subscribe. Hey everyone, me Kevin here. We need to talk about Microstrategy because what's going on with Bitcoin and Microstrategy is remarkable. But a lot of folks were expecting, myself included, that Bitcoin was going to hit 100,000 this weekend. I thought we were going to get to our 102K level, but we topped out at about 99.5 on Friday, and now we're sitting at around 96,000. Now, obviously that sounds like a lot. I mean, that's $4,000 of a swing almost, right? 3.5. But it really only represents like a 3.5 to 4% swing. It's like sort of like the daily fluctuation of any normal stock. It's not a big deal. But a lot of folks are wondering, what's going on with MicroStrategy and how does that particular stock boom? Is it a fundamentals thing? Is it a long-term thing? Is it like what? Because after all, MicroStrategy in the last year is up 711%. 711. Yeah, that's pretty crazy. A year ago today, November 24th, they were selling for about $52. Right now, they're selling for $421 per share, which is literally down 18% from the peak 3 days ago. This is crazy, okay? 3 days ago, this was selling for about $115 more per share at roughly $535. Now it's at $421. Although who knows, maybe it'll skyrocket again when the market opens up for Black Friday, or you'll get a Black Friday discount sale. Who knows? But a lot of folks are wondering, like, Kevin, what is actually going on here? Like, what do they actually have on their balance sheet? So that's the first thing I did, is I went over to their last filing, and you have to do some adjusting here because we believe that they hold about 252,000 Bitcoin before their actual bond offering that they just did. So that does make things a little bit more complicated because when you look at their balance sheet, you don't want to take digital assets for that $6.8 billion and assume that 6.8 is still worth 6.8. If you divide that $6.8 billion by 252,000 Bitcoin, they spent basically their cost basis is somewhere around $27,000 per Bitcoin. This means you actually have to multiply how much they say they have on their balance sheet of $6.8 billion in digital assets by about 3.5 to get to today's pricing, which means they actually have closer to $24 billion of Bitcoin. It's a lot. I'm like, dang, man, we just did this, robotics and AI and space exploration VC. We've got TBD, but I think we might be closing that within the next 2 weeks, and we've still got some slots. We've already raised over 7 figures for it. If you want to learn more about that, go to robohack.ai. But I believe that's going to close in about 10 days. It'll be about a week before the house hack offering. But anyway, you can learn about that. I'll just link it down below, or it's robohack.ai. But what's remarkable here, think about this for a moment, is they show this on the balance sheet at a cost of $27,000. Why? Because in order for them to increase what's on their balance sheet and show it to you correctly, they'd have to take a gain. But if you take a gain, you have to pay taxes on it. So that's the cool thing about having appreciating assets is you don't actually have to pay the taxes on it, right? Anyway, so I mean, they've got $24 billion of Bitcoin. That's why I was joking. I'm like, we just raised 7 figures for the VC. And I'm like, oh, this is so cool. I raised 7 figures for the VC. And then I'm like, bro, they just raised $3 billion. And what are they doing with it? Oh, buy Bitcoin. Wait, so they don't have to go like deal with tenants and toilets or like interview robotics companies or like deal with startups or other people? Nah, just buy Bitcoin, man. And I'm like, damn. Well, they got freaking easy, man. Okay, I don't want to, Michael Saylor's been working at this company, Microstrategy, for, a quarter of a century or more. So I'm not trying to discredit work, but it's kind of like, all right. Anyway, so y'all got 24 billies. You just raised another 3 billies. And what are you going to do with that 3 billies? Well, you're literally going to buy Bitcoin with it. You say and general corporate purposes and you're filing on it. They're going to buy Bitcoin. Okay, got it. So let's now say they have $27 billion in assets. How much debt do they have? They've got on their balance sheet, long-term debt and current liabilities, all that good stuff. Got about 7.5. Some of these are deferred tax liabilities and otherwise, so not that big of a deal. Let's just go ahead and say 7.5 now, including the $3 billion more that they just raised here. Okay, cool. So you've got 27 billion in total assets minus 7.5 billions of debt. Puts us about 20 billions of actual equity. So then I look at, well, what's the stock trading for? And that is about $85 billion. So that means they are trading for about 4.5 times how much Bitcoin they have. And then this is where we have to look and say, okay, well, I mean, their valuation shouldn't only be the book value. Like an actual operating real estate company, for example, like Invitation Homes, they don't do wedge deals, but they trade for like 2.2 times book. So, you take 100,000, let's say, as a house, $50,000 of debt. Okay, you got 50 of equity. They'll trade for 100,000 because there's actually like an operating company that can go buy more real estate, in other words. And that's like your bare minimum on an asset company, right? That's not even big growth at like an Invitation Homes. But they're trading here at about 4.5 times book. Supermicro is trading for less than 2 times book as an AI play last week. That's why I bought the crap out of it. I'm like, less than 2 times book? That's a freaking steal for an AI related. No guarantees. So I'm seeing them, I'm like, all right, okay, y'all trading for like 4 times. So what do you do then? Because maybe y'all do something that I don't know, makes a lot of money. And so I went over to their income statement, and the first thing I noticed is that revenues have basically been declining. They could be for a while. I mean, not just the last 3 months, last 9 months, but the Kubisi letter put a great little chart out, and they show just declining revenues for their products for a while. That's not to say that their products aren't worthy, but usually when you have a company that is taking a net loss, mostly because their operating expenses well exceed their gross profit by, a lot. Now, some of it's because they take impairment charges, but even if you didn't take the impairment charges, you'd still be losing money because you're spending more money on the operations for this, software company that you have than you're actually making. And growth is declining. So you're a money-losing company where growth is declining. That makes it really, really hard for you to get multiple in software. Like companies will be okay, like markets rather, will let your stock skyrocket if you're losing money if you have growth, like a snowflake. Oh my God, growth. Now people pay for growth, even if you're losing money, which also blows my mind as to why Peloton stock is doing decently in the last few months because they're losing money and they really don't have growth. I think people just look and they're like, oh, it's less than $10 for Peloton. I have a Peloton. Buy. Like that's sort of like the due diligence that exists out there. Anyway, so, all right. So we're trading for 4.5 times book. We don't really have a rationale to give this thing, an acceleration here in valuation for the fundamental business because, it's losing money and it's declining in growth. So why do we have a bond offering of $3 billion? And how does this actually work? Like, who would buy a bond offering for Microstrategy? And what does this potentially mean if things go oopsie doopsies? Well, first of all, they're issuing a $3 billion bond offering with a 0% interest rate. That's crazy to me. A 0% interest rate, and it's due in 2029, and it will not convert unless the stock is trading for more than $672.40 per share. Okay, wait a minute. This seems a little weird. Help me understand this, Kevin. So if I buy $1,000 of Microstrategy bonds, they're going to pay me $0. Correct. They're going to pay you $0. Okay. So what do I get out of it? Well, if Microstrategy goes to, let's say, $1,000 a share in the future, your $1,000 will convert into shares at $672. That's a 55% premium from where we sit today. And then you'll get the difference. So you'll get that upside, that extra, 30, 40% or whatever. You would get that upside. So it's almost like a call option, And that's why they're not paying you any interest. Now, what's kind of weird about it is if you try to buy a call option instead, you start realizing because the volatility is so high, the premiums are even more overpriced. So even though you're paying a 55% premium on the bond, you'd be paying way more, probably like a 70 to 100% premium on long-term call options that don't even go out to 2029. So people are thinking, hey, let me park money into these Bitcoin bonds basically, and you get a few benefits. Number one, they're preferred. So if the company Microstrategy goes bankrupt, the first debt that gets paid back, not the shareholders, it's the bondholders. So the bondholders are going to get paid back first if Microstrategy goes bankrupt. Okay, got it. So you got liquidation preference. So imagine that, liquidation preference on basically an option. So if the company doesn't trade for over $672 in the future, technically MicroStrategy needs to pay these bondholders back. So they'll give them the cash back, they'll refinance, they'll do some new bonds, whatever, or sell some stock, whatever they need to do. So if they do that, then really what they're doing, because these are convertible bonds, really what they're doing is they're saying, hey, do you want a call option on Bitcoin? You start making money after $672. If it's less than that, you get your money back. If we go bankrupt, you get first priority, you get getting your money back. And if we go to $2,000 a share or whatever, you get all of the difference between 672 and 2,000. Okay? For a lot of people, that actually makes sense because you're kind of wondering who would buy these bonds at a 55% premium? Why? Well, that's why. Because it's basically a call option that doesn't have theta decay and it has liquidation preference. Okay, wait a minute. That's actually, when you put it that way, kind of interesting. Yes, it is. And not only do you have that longer expiration time frame, but you can buy it in a 401k or something else. So convertible bonds are actually very interesting because of these features that they have. They're very complicated to understand, and I'm about to go through how things could actually go wrong with a convertible bond. But I want to mention, this is the similar structure that we used for House Hack, except we made it even more desirable for our investors. When people invest in House Hack, they get, over at househack.com, they get a 5% coupon, and we pay that out monthly. So every month you get a check for 5%, divided by 12, obviously, for the year, of what you invested. It's at househack.com. And rather than telling you get the upside of the stock at a 55% premium like MicroStrategy, trading, for 400 something now, and it doesn't actually convert to shares until 672 and some date in the future, we're basically saying, hey, we'll give you today's valuation, no premium, and the low end of today's valuation too. So, in other words, we think our hope is that a House Hack, which isn't public obviously, can IPO at some point in the future, and then you get all of that upside and you got paid a yield. So that's just something to, when you're thinking about MicroStrategy, compare, because the pros and cons are actually similar, with the fact though that MicroStrategy charges you a 55% premium, although they do have a much more volatile asset, Bitcoin, that they're buying. We're raising bonds to go buy real estate that basically yields us, depending on the real estate we buy, probably an average of 4 to 5%, something like that. We use that, and we get a good deal, wedge deals, which helps us pay out a yield. And that lets us grow our asset base, which lets us grow the company and become a really awesome part of, frankly, what we want to be is America's best landlord, create the best homes, and then eventually turn those back over to the community, not just helping people with rentals in the meantime, but long-term ownership too. So where does MicroStrategy go bad? Well, MicroStrategy could potentially go bad if the valuation of Bitcoin fell dramatically. Now, the problem with Bitcoin, and some people see it as a feature, so I just want to be transparent here. I'm not taking sides. I just want to be clear. The problem with Bitcoin is that because it's an asset class that does well when it does well, it does poorly when it does poorly. Now, I know that sounds like a duh, but I want you to think about this for a moment. When real estate is rented out, as a comparison, this is very important. When real estate is rented out and the market falls, as long as the tenant's still paying rent, it doesn't matter. As long as you're in your portfolio, 90% of your tenants are still paying rent or 95% are still paying rent, it doesn't matter what the market value is. Your rent is not predicated on the market value of the real estate. With Bitcoin, what sustains Bitcoin is not rent or company earnings, which does have benefits. You don't get sometimes the volatility. What sustains the price of Bitcoin is Bitcoin being bought. So on the upswing, as companies like Microstrategy take $3 billion and go buy more Bitcoin, you push Bitcoin up more, which then induces more people to buy Bitcoin. In fact, we have had greater flows into Bitcoin-related funds, thanks to Saylor again, just this last week than we had going into GameStop during the GameStop euphoria, which is crazy, okay? Yes, many call it a bubble. Some even call it a Ponzi because you're taking this money that you've raised and now you're buying more, except you're accelerating the value of what you're buying, which again is also different from buying real estate. Like you buying a house in a neighborhood and there are 10,000 other homes. Is it going to jack up the prices of all these homes? Whereas when you're taking $3 billion of Bitcoin, you're probably eating up all the sell order book basically, and you're driving it up more. So the issue is once Bitcoin starts falling, we don't know when that will be. It could hit 250,000 first, it could hit 1 million first. I have no idea, okay? But once it starts actually sustainably falling, it becomes very hard to sell. And I don't mean like putting it in order to sell, I mean sell to people. It's very difficult to sell a retired couple, hey, only 1% of the world owns Bitcoin, and you should too before everybody else gets in. Want to buy some Bitcoin? And usually the only due diligence that's done here, by the way, is they look at the chart. All right, well, what's the performance been over the last year? It's doubled. Oh, yes, I'll buy some. Okay, now how does it work? Well, it's down 30% over the last year, but don't worry, it's just a volatile asset class, it'll go back up. Yeah, we're going to think on that one. It's like, selling something that goes up is easy. You don't want to be the person telling somebody that something that's going up is going to go down because nobody wants to hear that because that means people are losing money. But what happens when it actually does go down? Well, then it becomes nearly impossible to sell to new people to get inflows because the recent history is bad. This then does the opposite of creating the order book of FOMO, which we have now, which is people are only buying at higher and higher prices because they want to be part of the game. It creates the order book of fear, which is Microstrategy can't raise money anymore, people are selling, and now you have this sort of self-sustained decline. Obviously, that's just Bitcoin as an asset class. If a fall in Bitcoin is conjoined with a fall in the stock market, well, we could create a recession. But that's really a topic for a different video. We don't want to get so broad here. The point is, once you actually get a sustained correction again, you are going to slow down your adoption of Bitcoin, and that is going to substantially reduce the volatility of options and MicroStrategy stock or whatever. That might be a better time to consider buying options or actually buying into Bitcoin. So I'm not here to say when it goes down, it's going to go down forever. There will always be better times to buy. It's simply to say that now that we have an understanding of all of this, we have to consider MicroStrategy again. So what happens when MicroStrategy potentially gets into a place where they have to start paying back their bonds, their convertibles, but they cannot pay them back? Okay, this is a problem. So when you have $7 billion of convertibles and your stock starts falling, then you're not going to be able to convert the bonds to shares. Instead, you will have to pay them back. But if your stock keeps falling, it makes it very difficult for you to refinance those bonds, to get new loans, new bonds to replace the olds. And in that case, you start running into potential problems where you have to issue shares on the stock market to pay for your first bonds, to pay them off so you're not in default. That's fine, it works for a while as long as your stock price still has something to it. But what happens is your next bonds expire in 2027, and there's only about $1 billion of them. Then you've got about $1 billion in 2028, and you've got about 785 in 2030. You've got, and then you got you got about 631 600 in 2031. You've got 786 in 32. And then, of course, you just added the 3 for 2029. So when this really becomes a problem isn't actually really until, likely 2027, if and when Bitcoin was a lot cheaper, and all of a sudden they couldn't pay off that $1 billion in bonds. I think that's one of the reasons why they've actually been smart to start moving these bonds down in further out in time. You know, they're going 27, 28. The latest 3 bills that they did are in 2029. This is smart. The biggest risk factor is not going to be near term for MicroStrategy. There's going to be near-term fluctuation. It's actually what happens at the end of the decade. What if you're at a place where the Bitcoin euphoria has died down a little bit and now you're below cost? That would be problematic. Let's say their cost, their average cost basis would be somewhere around 35,000 once they keep adding more Bitcoin, whatever. Let's say their average cost is somewhere around 35,000 and Bitcoin goes to, I don't know, $20,000. I'm just making an extreme example here. I know many people are going to go, oh my gosh, I buy the dip out of that. Great, that's fine. But what if your buying the dip doesn't help because you don't have MicroStrategy buying? Okay, and now the asset trades sideways for 3 or 4 years. Well, the big risk here, and you can see how far down the road it is, but the big risk here is the asset trades sideways. There's little liquidity for MicroStrategy. They need to dump shares to actually be able to pay off their debt. So their stock valuation goes down. Their earnings from their software business aren't helping them because there are no earnings and they're not growing the earnings. So all of a sudden, towards the end of the decade, you could be in a place where this stock has a lot of problems if Bitcoin is not worth more. Bitcoin just consistently needs to stay above $35,000 would be my safety buffer there, which honestly, you've got a lot of room between now and then. You're at 35 now. It would have to fall somewhere around 63%. So that it can happen. You get another crypto winter. It seems like there's insulation here, but I'm just saying, if for whatever reason we start trending in that direction, keep that in mind. MicroStrategy is going to have the oopsies between 27 and 2030 if Bitcoin gets back below, maybe write that down, 50K. So put a little alert. If Bitcoin under 50 and date after 2027, MicroStrategy starts having maybe oopsies. But between now and then, your debts just aren't coming due with this company. So really, this company, Bitcoin could go down to $20,000, and this company doesn't have any problems because they're not paying any yield on their bonds anyway, pretty much. I think they just paid off their 0.75 yields. Their 2028s cost them 0.62, 2030s 0.62, 2031s cost 0.87. And their 2032s cost 2.25. Okay, so they've got a little bit of interest expense, but it's so freaking nominal they could sell a few Bitcoin and cover it basically. They're probably going to be okay until their bonds start coming due, and you would need Bitcoin to collapse. So in other words, a lot of people, it makes sense why people are looking at these 2029 bonds for MicroStrategy because they are probably insulated between now and certainly until their next bonds come due, 27, 28, 29. And you would need Bitcoin to fall substantially, in which case, if you thought Bitcoin was going to fall substantially, you wouldn't buy the bonds anyway. So this is why when we ask, why would people spend $3 billion on bonds offering 0%? Here's your answer. So hopefully this is a useful look into what the heck is going on at MicroStrategy. If you found this helpful, subscribe to the channel, check out robohack.ai, check out househack.com for convertible bonds that actually pay yield, and subscribe to the channel. Thanks so much for watching. Bye.